Hey, it's Age here. Today we're taking a look at technical analysis for US government bonds for the 10-year yields. I'll cover wave analysis with Elliott Wave Theory and provide multiple scenarios your price may take and explain why I prefer one count over another. Let's take a look at the different possibilities. Again, starting here on daily time frame and looking at the same structure that we've been going with for quite a while now. Again, I haven't been covering this asset for too long, so again we are starting from the lows that we had from March 2020. In this one, again, we had a minor 1-2, a minute 1-2, a minuet 1-2, completing that minute third, fourth and fifth, so creating this minute 3 up in here, looking now possibly at the fourth here. Now previously on the previous videos I mentioned that this could be a wave 1 of this fifth, or it could be the wave 5 already completed of this minute third. At the moment we have already broken out all basically the all lows that we had for the previous lows that here on RSI, so that's why I do think that we have already created this as the fifth leg, and this here would be the starting structure of that larger time frame wave 4. So that is basically the reasons why I do have this as the wave 5 already and not really looking at this as a wave 1 anymore. Of course, the invalidation for that idea completely would be at these lows here around 3.572, and if the yield goes below that, then this is confirmed again that this indeed was that top. Now the idea here currently is that we could be looking for some comparisons between the wave 2 and wave 4 here. Wave 2, we can see that it is not an expanded structure. It looks like it is some kind of complex structure, however. It could be some kind of zigzag pattern here. So what we would be expecting here is some kind of expanding structure, which is again taking out these highs, possibly creating some kind of structure like this, or we could be looking for a triangle here. At the moment, if we are zooming in a bit closer, the way I've labeled this at the moment is like so, where we have this as an A, B and then C. I'm not quite sure if this wave C is yet done, because again this structure here looks more like a 1-2, 1-2, and this definitely has the characteristics of a wave 3. So instead of having the third wave actually here at the 1-1, I would be expecting us to get to the 1.236 and the 1.382 extensions here for that C wave. So if we want to be labeling these more lower time frame structures, we would be doing something like this as a 1-2 and 1-2, so sub micro. And then of course we are looking for these extension targets, and we would be doing something like this. At the moment we hit the 2.618 extension to the dot, so that is possibly area of interest for this third wave. Here we would be expecting again some kind of flat structure in this wave 4, because again the extension here, the structure in here looks more like a three-way structure that is not expanded beyond the starting point of this whole thing. So again, that is one area to look at for that. Generally where we are looking for another pivot downwards would be around the 38.2, which is the most common one. At the moment that would be quite a large looking wave structure against the wave 2, so it is possible that we would be just targeting the 23.6% as well, of course assuming that this wave 3 is already done. It is possible that we are taking more lows here as well to create this smaller time frame structure here as well, but again, as mentioned, it could be done here. Hitting that 2.618 again means that we have an extension here on third wave. So we don't need to be really expecting any kind of extensions on fifth waves. So if we are looking at some of the targets here that we have, we could be looking at some of these, and this looks like 2.618 is most likely going to be hit. We might be looking for, let's see, if we are pivoting again from here and expecting the 23.6 and having this extended, we could be targeting some of these 3.7 to around 3.76 to 3.68 areas here for that third wave of micro. So that would be the targets here, then looking for fourth and fifth. Of course, again, depending on how we want to be labeling these substructures, we might be missing or adding another leg down here later on. But at the moment, this is what it looks like to me. And the larger question here, let me put these guys back onto the local folder and hide that, is that because again, we are expecting quite a large, actually, let's get that trend base fib here. So again, if we are looking at higher time frame here and comparing the wave 2 size here against the wave 4, the 1-to-1 would be February 2023. So that would be a lot of time to be used. It could be that this structure here took quite a while in time and not really in price. So this wave 4 could be more swift and way faster in that time. So in here we could be getting this as a 3-wave structure, 3 waves up, and depending on how high we get here as that retracement, we could be looking for at least the expanded structure here, or again, if we don't get to the 90% retracement of this move here, we would be looking at some kind of WXY. Generally, where we would be looking for as an area would be the previous wave 4, which would be again this area here, ranging from the 3.5% to 2.53%. We have the most common target 38.2, a retracement of this third wave here, as well around this area 3.11%. So that is definitely one target to be hit. I'm not quite sure if we are going to get that low, but we'll see later on. Definitely an area of interest is this low as well here, where we had a 23.6% retracement of this whole move, because again we have some kind of significant lows there, where we had again this area as a support and resistance before, and we'll see if that is going to be giving us some kind of signals later on. But I think that is pretty much all the expectations I have here for this wave 4. Of course, whatever this structure first could be just the start of that structure, and we would be doing something like this, even lower. But again, the whole invalidation of this whole idea would be all the way down here at 1.78%. So I just don't see us getting that low at all. So that's why I do think that this is going to be very likely. Now on higher time frame again, this would be just the wave 4 of that third wave. So we would be creating something like this later on, creating this larger topping pattern, whatever it's going to be forming into. But that is the idea here. But I think that is pretty much everything I wanted to cover here on the government bonds for the 10-year yields. If you made it this far into the video, I would appreciate the likes. Link to my free Discord server in the description below. And for now, I thank you for watching and hope you have an amazing rest of your day. See you next video. Bye bye.